Welcome to You and Your Money. Today's episode features Holly Wanegar, Vice President and Associate Financial Advisor at WHZ Strategic Wealth Advisors.
So it's the height of the season for giving, and a lot of people are participating in charitable giving, which is just amazing. I just love it. But the clock is ticking on some tax incentives for charitable giving, making it even more important to maximize giving before the end of the year. Tell me more about that.
Yeah. So as I mentioned, the OBBBA that came through this year has some different changes in the way charitable contributions will be reported on your taxes. That's coming into play next year. So the big changes there for 2026, if you itemize, there's now a floor of 0.5% of your AGI that you would be able to report charitable gifts on. So for example, if you make $100,000 a year, you'd have to give over $500,000 to get a deduction. If you do not itemize, though,
over $500.
$500.
Okay.
Sorry.
Yeah, okay. Okay, that's all right.
Extra comma there.
Yeah.
If you do not itemize and you take the standard deduction, though, you can still deduct up to $2,000 if married filing jointly.
That's kind of a big change, right?
Yeah.
Tell me more about that.
Yeah. So as we mentioned, you have to hit this new floor if you itemize. So if you're charitably inclined, which we have such a wonderful community that we live in, these next few weeks could be critical to maximize your tax benefit of charitable contributions, as those tend to get a little bit tighter in 2026 next year with this new tax law coming into play.
So let's get into strategies. I understand there are several ways you can go about making your contributions. One of them is something called bunching. Bunching. What's that?
Bunching.
Yeah.
Yep. There's a few strategies we'll talk about. We'll start there in bunching. So essentially what that says is that you can, instead of donating the same amount every single year, you could bunch a few years together into one tax year. This would help you sort of exceed that standard deduction and maximize your gift and tax impact.
So give me an example of that.
Absolutely. For example, we'll use $10,000 a year. If your budget for charitable giving is $10,000 a year, you could bunch the next few years. And so give $30,000 this year, which would exceed the standard deduction and maximize the tax impact of your charitable contribution for this year.
So it's like you're front loading to maximize the tax benefit.
Exactly. Okay. Exactly. Yep. So it's a little bit more strategic in that way. Where you give more now.
Some people, I would imagine, would worry about committing that much money at once.
Yes,
right?
Yes, that's a common concern. Absolutely, and that's where there's a very powerful tool, donor advised funds, that come into play to help us with that.
Donor advised funds. I've heard that before, but I'm not really sure everyone knows what that's about. Tell me about that.
Absolutely. So think of a donor advised fund like a charitable savings account.
Okay.
So you can put funds in there, take the tax deduction for the year you make the contribution, and then that money can stay in there, can be invested in there, can grow in there, and then you would give to charities over time at any point in the future.
All right. So it's like getting a tax benefit now, but having time to decide where the money's going to go, right?
Exactly. It's pretty powerful. So when you think of bunching, we'll use that $30,000 example, where you can make that large contribution in 1 year, you get the tax deduction in that year, and then you can give to charities in any cadence in the future.
And you said that money can grow?
Yes. Yep. It can be invested in that account. So we'll stick to the $30,000 example. You put $30,000 in there, it grows to $40,000. That's tax-free growth. So you can make more of a charitable impact.
All right. Anyone can do this?
Anyone can do this. Yep, absolutely. There are some custodians that will have a minimum that you have to contribute, but the minimums are generally pretty low, though.
Okay. So what's the next strategy we should consider?
Absolutely. So instead of just donating, there's many ways we can donate. Instead of just donating cash, for example, which is probably the most common one people think of, we can donate assets, appreciated assets like stocks or real estate that have capital gains embedded in there. And we can be pretty strategic in how we gift those to eliminate those tax implications.
So if I bought stock for $10,000 and it's now worth $15,000, that kind of thing?
Yep, exactly. So if you sold that stock, you would have to pay tax on the $5,000 of growth, right?
Yeah.
Capital gains tax. However, if you gifted that stock worth $15,000 directly to a charity,
Okay.
they don't have to pay capital gains tax. So you alleviate that tax bill, and your impact is greater to
You
your
take a
charity.
deduction for the full
And you
amount.
take a deduction. Yep.
That's interesting.
Mhm.
Does this work with any charity?
Most established charities can take stocks. You'd want to check in with them
Yep.
to see if they could, and of course work with an advisor to help you navigate the logistics. We work with people a lot with
All right.
those types of
I understand there are also some special strategies for older people who want to give back as well. Tell me about that, Holly.
Absolutely. So if you're 70 and a half or older, you can do what's called qualified charitable distribution from your IRA, your retirement accounts. That limit, you can donate up to $108,000 from your IRA. Pretty generous. Don't have to go that high, but it also counts towards your required minimum distribution if you are required to take minimum distributions, and it basically alleviates the income tax on those distributions.
So you can satisfy your required minimum distribution without paying taxes on it?
Exactly.
Okay.
If given directly to a charity from your IRA, you avoid paying income tax on it. The charity gets that money income tax free, and increases
It sounds like a no-brainer.
your impact.
That's pretty good stuff, right?
Yeah, it is. And it's probably one of the most underutilized strategies. They continue to tweak the rules and the laws around it, but still 70 and a half, you can start making those qualified charitable distributions in tax efficient ways.
So getting close to wrapping up here. So as people think about about their year-end planning, what should we be doing right now, Holly?
Great question. So first, review your giving capacity. What does your budget look like? Can you exceed that 0.5% AGI floor in the future? And second, if you're a higher earner, consider accelerating some of your planned giving, the bunching or charitable donor advised fund charitable contributions we talked about, to maximize your 2025 benefit. And of course, if you're over 70 and a half, consider qualified charitable distributions that we also just talked about, and coordinate with your advisor. They can help you really understand and execute those strategies.
All right. Again, if our listeners want to learn more about developing a charitable giving strategy, how can we reach you, Holly?
You can find us at WHZwealth.com or give us a call at 860-928-2341 and set up a complimentary discovery session.
For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Merrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth. Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.